Welcome to Markets Now. I'm Michelle Rook with Matt Bennett, agmarket.net. And we had mixed trade in both grain and livestock futures today. But Matt, let's start off talking a little bit about the wheat market. 3 days up. Is this all about short covering or are we putting in risk premium?
Yeah, it's a combination. Again, this wheat market has been beat up for quite some time. It's been tough to really garner any sort of positive momentum there. Then you come in here and you say, hey, we might be starting a war in the Black Sea region. Obviously, there's some pretty tough talk going on. A little bit, I guess. It's got more teeth in it than what we typically see when you're talking about firing missiles. And so um, it's concerning, I think, for a lot of reasons. But first of all, whenever you're talking wheat, there's so much wheat that flows through the Black Sea region. We know that every time the wheat market's really popped up, Russia's dumped cheap wheat out on the market. And so if they're not capable of doing that due to having other things going on, it's certainly going to put a little bit different spin on this world wheat market. And I've got to think some of these originators are just a little bit concerned.
Yeah, and we had gotten so numb to some of that Black Sea rhetoric, obviously, in the market. Corn, though, even though wheat was up, corn could not follow. And I'm sure that was partially because of the lower soybean market. But again, that market's had good underlying demand, but we can't really just get above these resistance levels. What do you think is holding the market back right now?
Yeah, there's a variety of things, Michelle. I mean, if I were to told you that we would see bull spreading going on, that we would see the funds buying corn, with a 1.938 carry, you would have said, no, that's not going to happen, right? I mean, we both would have said that. I mean, that's not the typical protocol. It's been a very interesting year in that, of course, farmers held a lot of corn into harvest, had to dump some. They're still of that tight fisted mindset. Which is evidenced in spreads, it's evidenced in basis. And so, but why can't corn just really take off and go? I think there's a couple, three things going on. One of them is that obviously the bean market looks rough. I mean, it's not only struggling on front month futures to stay above $10. It just, you look out farther in the demand picture, no matter how good it is, you've got gigantic stocks. And so beans aren't helping out whatsoever. And then you look at the farmer, obviously they're tight fisted, but at the same time, we know we've got tons of ground pies. We know we've got tons of corn out there. And so does anybody really want to chase this market higher? It's very concerning to me to look at the last couple of weeks. We've bought over 100,000 contracts of corn and we haven't moved the corn market. I mean, it's just not been able to move. And so last week you saw the funds in for 87,000. On the flip side, though, the commercials sold about 77,000. And so there is some farmer selling going on. And I do think that ultimately, with these really strong basis levels, it's going to be really hard to get this board to move without a huge, huge influx of buying from the funds. And right now, you got to ask yourself, why would they do that?
Well, and if they can't get above this 435 area as far as resistance on the charts, how many times do they hit their head above that on that level before they just give up?
Yeah, I mean, you got to ask yourself, you're going into option delivery this week. Then you've got first notice day. These corn in this type of environment, especially with all the bull spreading that's already gone on, I don't like the chances for continuing some sort of rally. I've got to think maybe some bear spreading will take over, in that this market might kind of lose its steam, if you will. With that being the case, I mean, if we want to talk about something a farmer really wants to listen to is, you've got flat cash price significantly, I mean, significantly higher than what the harvest lows were. If you want to look at futures only, I mean, we closed pretty much 45 cents off the lows that we set back in August. Then you want to look at in the middle of harvest, where were some of our basis levels, locally for a lot of folks, 40, 50 under, with the processor, maybe 20 under. Whereas right now, we're hearing about processors bidding 20 and 30 over. So just a massive increase in basis and flat cash price for some folks off the low. You're talking anywhere from 50 to 75 cents. So we have to be really cautious, Michelle, is to sit here and throw cold water on a rally that we were really asking for. And yeah, it's not all been on the board, but we got to look at the combination of board and basis.
Absolutely. So get something done here. Soybeans, as we point out, going the opposite direction here. And conversely, funds are actually short in that market. They've been pushing a little shorter. And some of that is due to tariff concerns, but also the South American crop we continue to see bigger production estimates, don't we?
Yeah, for sure. I mean, there's no doubt that you've seen anything from the 160s up to 170. For Brazil, they continue to plant more soybeans. It's something that is probably not going to stop anytime soon. The one bright spot, if you will, for the market, whenever you're looking at South America, Argentine dryness, yeah, they're a little bit dry, warmer. But you got to remember, I mean, they're only about a third of the way through planting. And that's kind of what you want when you're planting, is to be a little bit warmer and drier. And so, the La Nina type action typically would suggest Argentina and southern Brazil could have the tendency to be a little bit drier this year. Right now, that's kind of playing in. But at the same time, in totality, South America is likely to contribute enough soybeans to more than carry us. Whenever you look at that 2-year window that the USDA puts out, and in November, they came out at the start of last marketing year, we were about 100 million tons of beans. And right now they're predicting about 131 coming out of this year. That's with average weather. So with that being the case, Michelle, I mean, you're going to take up world stocks 30% over the course of 2 marketing years. If you do that in any commodity, you cannot expect to feel too rosy about prices going up.
No doubt. And how long do you anticipate demand's going to hang in there on soybeans? It's gotten a little bit better, but it looks like China's been kind of front loading here on tariff fears, right?
No doubt. I think one really good sign, I know I talked to you about this earlier today, is that they took off the tariff, if you will. I mean, it's complicated, but basically on the used cooking oil, China's saying, "Hey, we want to make this cheaper to get to you." I mean, that's the general rule here. And with them saying that, I believe that they're going to want to work with us. I know I've tried convincing a few people this lately. Just stop and think about what China's economy looked like back when Trump was in office the first time. Clearly, they were in a better position. You weren't talking about as much slowdown. You weren't talking about influx of cash into the country and trying to keep interest rates as low, as what the Chinese have been talking about here recently. So I don't know that they've got the ability, to play as much hardball as maybe what they did before. I think they're going to want to kind of work with us. So with that being the case, I hope on our end as well that we've learned a little bit from the last negotiations we had with them, and that maybe we can approach it, in a level that won't hurt business near as much as what it did before.
Yeah, and we settled January just below the $10 mark, but you have kind of a sell the rally mentality now going on, don't you?
I mean, personally, I do. Yes, it's just tough. I know a lot of growers like to sell beans in the fall. They don't like to store them on the farm as much. But yes, there's still some bean ownership out there. Another bright spot, I guess I haven't touched on, is that crush has just been fantastic. So, if you're close to a crush plant, some of these, basis levels have been pretty darn good. So if I'm a grower, and I say, well, I don't really like this price right now, then if you put an offer out there 40 and 50 cents above the market, who knows? In a couple of days, you might hit it. It might hit on the overnight, and then you might be back off 20 cents during the day session. But it never hurts to put an offer in above the market. If you know it's an offer that can work with you and your operation. I know not everyone had a banger of a crop, but there's a lot of growers in the high states, that had 70 to 85 bushel beans. And in those cases, if you run the math, most people can still come out okay. But if we would slide another 50 cents to a dollar, I don't know of anybody that'd be able to make that work.
Yeah. So let's talk about cattle. Pretty decent close here today. Triple digit gains in both live and feeders. And you did get the live cattle futures back above these key moving averages, or at least the December live cattle. Do you think the funds are going to continue to defend their long there?
It today looks good for sure, Michelle. I guess the thing that concerns me just a little bit with cattle is that funds have been long forever. We know that. We're not expecting necessarily a bullish cattle on feed report this week. I know the estimates are 100, 104, I believe, on placements and cattle on feed. But bottom line here is, again, if you're sitting in, for instance, the Western Corn Belt, yes, there's finally been some rainfall that's occurred out there, but you look at the drought monitor, and most of the folks that are in big time cattle country, they're dry. And so, first of all, can you keep heifers back? Second of all, if someone comes to your ranch or farm and says, hey, I'll give you whatever. I mean, I've heard of $4 plus feeders for 400 pounders. I mean, that's just crazy type of money. If someone comes to you and says, hey, I'll take her off your hands, you don't have to worry about getting her bred and calving her out. That's good money. And that's money that most of us haven't ever seen. And so with that being the case, it's really tough to build a herd. It's keeping numbers low, but we're just not seeing that push towards those old highs that I think the funds were kind of banking on. And I am concerned that if the equities continue to struggle, like we're kind of seeing here, that cattle might struggle as well. So I'm not saying I'm bearish, Michelle, but I would highly urge anybody with any risk whatsoever, if you've got feedlots full of cattle, what's wrong with the 180s? Put a floor under this thing. That doesn't mean you're bearish, it just means you're smart.
Yeah. And if we do continue to hear some of this rumor of expansion, which, as you say, I'm not seeing either, that could spook the funds here a little bit too.
Yeah, it could. And let's just face it, there is some rainfall that's occurred. We know that. I mean, when we talk about wheat,
Absolutely.
the wheat crop looks good. Why is it? Because wheat country's gotten some rain. Wheat country happens to be cattle country in a lot of areas. So, yeah, these pastures heal up. There's no doubt that these guys and gals will have a choice then. Do I want to keep these girls back this next go round? And with that being the case, there could be some herd building for sure. But again, I kind of equate this to, $7 or $8 corn, for cattle here. It doesn't stay up here forever. We've got to be really cautious to be bullish when some of these prices that we would have begged for a couple, 3 years ago, are hanging around.
Yeah, definitely going to watch for heifer retention. All right. Thanks so much, Matt Bennett with agmarket.net. That is Markets Now.